Hey Bowtie Nation, Joseph Hogue here with a special video today that I know is going to change a lot of lives out there. That's because we talk a lot about picking stocks here on the channel, but sometimes I think we're making it more complicated than it needs to be. And it's not just here, but any investing blog or flip on CNBC, and they expect you to hit the ground running like Warren Buffett. It can be easy to get overwhelmed and you end up not starting on that investing journey that makes your money work for you. So today I want to change all that. I want to make getting started investing as simple as possible with the 8 most important questions you're going to need to answer. Then I'll tie it all together with a step-by-step strategy you can use to make $3,000 monthly income from small investments, so stick around for that. For those of you that have already started investing, it's going to be a great refresher course on all the basics that will make you rich. If you've lost money investing, folks, over the last few years, it's probably from not following these steps. And the first question I get from beginner investors is, how much should I invest? It's probably the most common question I get, and the one I think keeps most people from getting started. But the best and probably the worst answer here is just invest what you can. I know it's not the easy answer you want, but it is the truth. In our step-by-step later on in the video, I'll show you how to turn $150 or $300 a month into $3,000 monthly income, but it's not a rule, and it might not work for everyone. And yeah, you're going to hear things like save 10% of your income or calculators telling you how much you need to be investing, but they all leave out one crucial detail. Your own income and your budget are going to determine how much you can invest each month. So go through your spending, figure out what's left in your budget after paying those must-pay expenses. Now, I would recommend starting investing with at least $100 or $150 a month, but if you can't do that, just start with $50 a month. What's important here is that you get started investing. You start building that habit of putting money in stocks, no matter how much, whether it's $250 a month or $25. Next here, it is critically important that you get ready to invest, and this is something most investors fail to do. What I'm talking about here is getting your finances ready to start investing, because it's one of the most heartbreaking things to see, and it happens all the time. But I see people start investing. They're motivated, their portfolio is growing, they love it, then something happens and they have to withdraw some of that money. Folks, it is so demotivating having to start back from zero, and a lot of people, they just give up. They never get back to investing, and it just ruins their lives. So a few recommendations here on getting your finances ready to invest. First is you need at least a month's worth of expenses tucked away in savings. Now I know you're going to see a lot of advice on the internet saying you have to have at least 3 to 6 months worth of expenses before you even get started, and I'd say 3 months is a good target. But I don't want you saving forever before you start investing. The important point here is that you have some of that what-if money in savings, so you never have to withdraw your investments. Next here, if you can't scratch together at least $150 a month to invest, it's time to take a hard look at your budget and your income. And that last part, that's something that most people just don't think about, that income side of the equation. Yeah, most can usually find an extra $50 or so in the budget to invest, but sometimes you just got to realize you need to make more money, whether that's through a side hustle or just finding a better job. But as you're planning here, as you're working through this, I also want you to not be investing every dime, sacrificing everything and just being miserable. I fell into that trap myself in my 20s. I was saving every penny, working 2 jobs, and managing my own real estate rentals. I was living on ramen noodles and having zero fun just so I could invest more. The problem was, I would burn out every 6 months or so and go on a shopping spree. I'd set myself back 2 steps, and it was because I didn't have that plan for what I could realistically invest and still be happy in the now. That's why I created this quick 3-step guide to making your investing plan. Within 5 minutes, you'll be able to create an investing plan that makes your goals the motivation to keep investing and that is customized to your needs. I'm going to leave a link below in the description. It's totally free, just something I wanted to put together for all you out there in the community. So click through that link and get your step-by-step guide now. I have seen too many investors miss out on the opportunity to make their money work for them, and it's because they didn't have a plan that fit their needs. So look for that link and get your free customized plan. So now you're ready to start investing, but what do you invest in? You've got the money. What do you put it in for that maximum return? But for that, I've got to reveal probably the greatest lie of investing, that it's all about picking stocks. In fact, investing is much more about that regular amount you invest and watching it grow over those 10 or 20 years. So don't stress out so much about picking the right stocks. In fact, the best strategy for your investing dollars, and this is the one I use with my own portfolio, is called the core satellite approach. Now, this strategy is called core satellite because you have that core of investments that make up between 60 and 75% of your portfolio. These are in exchange-traded funds, or ETFs. For example, you might have 15% of your money in the Vanguard Real Estate Fund, the ticker VNQ, which holds shares of companies in the real estate sector. Maybe you hold another 10% of your money in the Vanguard Long-Term Bond ETF, the ticker BLV, which invests in thousands of bonds and pays a 3.9% dividend. And finally here, maybe you hold another 50% of your portfolio in a few funds like the ProShares S&P 500 Dividend Aristocrats ETF, ticker NOBL, a fund of the best dividend stocks in the market. So by investing most of your money, that core 60 or 75% in 3 to 5 funds, you get that instant diversification across stocks, bonds, and real estate. Your money is spread out across hundreds of stocks. You've got bonds in that bond fund and cash flow from the real estate fund. Then with the satellite portion of your portfolio, that remaining 25% or so of your money, you can invest in those individual stocks that could really produce those higher returns. But the beauty of this core satellite strategy though is that because you only have that 25% of your money to invest in these individual stocks, and say you invest in 3 to 5% in each stock, means you're only picking maybe 8 to 10 individual stocks. And first, this is going to cut in half the amount of time you have to spend looking for stocks to buy and following those investments. You don't have to worry about the money in those 3 to 5 funds you hold. They're diversified across a group of stocks, bonds, or real estate, so they're going to be getting that average return on the investments. And second, because you only have maybe 3 to 5% of your money in each individual stock, you never have to worry about a blow up in one company destroying your whole portfolio. Okay, you have an idea of the stocks you want to buy, but now where? Which is the best online platform for beginner investors? Folks, there are 1,000,001 investing platforms, but honestly, they're all pretty much the same. There are just 2 things you want to look for here, and I'm going to share which platforms I use. First, you want to look for an investing site that doesn't charge you to buy stocks. When I started investing in 1999, Brown & Company disrupted the market by being one of the first low-cost brokers, and that was at $5 a trade, but even that's too much anymore. Most of the major brokers and investing apps have gone totally commission-free. Next here, you want to look for a platform that gives you the investing tools and the research that you need to invest. Now, this one isn't nearly as important as that commission-free investing, and some investors, especially beginners, might not even need those research tools. But then the trick is, when you're picking where to invest, there's nothing wrong with having more than one investing account. In fact, between retirement and regular accounts, I have 6 accounts on 4 different investing apps. It's free to open an account, and a lot of times, you're going to get bonuses like free shares on Robinhood, to cash back on E-Trade, and all the research you'll ever need. Another great question I get from beginner investors all the time is, how do I start a portfolio? Now you've got that money to invest, you have an idea of the stocks and the funds you want to buy from watching this channel, and the investing site you want to use, but now the question is, do you buy them all at once with just a little in each stock, or do you invest everything in one stock each month? And here I would definitely recommend buying all your stocks at once, putting a little in each instead of buying just one at a time, then adding to it each month. The reason is if you buy just one stock a month, putting all your money into it, there's going to be a long time where you just have a lot of risk in just one or a few companies. For example, even if you're planning on investing in maybe 15 stocks or funds, for 6 months, you're going to have all your money in just a handful of them. Okay, we're here to actually investing, putting your money down to buy a stock, and this is going to be surprisingly easy. I'll show you how to buy a stock on E-Trade here, but the process is almost identical on most apps. We're here in one of my accounts, and let's say I want to buy shares of everyone's favorite Apple, ticker AAPL. Now, if you don't know the abbreviated ticker symbol, you can just type in the name of the company, and a drop-down is going to show you the ticker. Here on the stock's profile page, you're going to see all the basics like price, market cap, the 52-week range of prices and dividends. Then across the top, you'll see a bigger chart, recent news, and options trading. Now let's say I've already done my research and I want to buy the shares, so you can just click on buy over here. This order page is almost identical on any platform. You see the bid price of the shares, which is the highest price an investor in the market is offering to buy, and here the ask price is the lowest an investor is willing to sell. Now the difference in these two prices get more important if you're doing options trading because they can be much farther apart. For most stocks though, the bid and the ask price is going to be less than a few pennies difference and right around that quoted price for the shares. In this drop-down list, you can buy, sell short, or buy to cover a stock. We'll select buy and then put in how many shares we want. Now if you're on a platform that lets you buy fractional shares or invest a dollar amount in a fraction of a share, this is probably going to be that dollar amount, how much you want to invest, rather than having to pick the number of shares. Since we have to buy whole shares here on E-Trade, we're going to divide our investment amount, say let's $1,000, into a stock price at about $233, and we can buy 3 shares of Apple. Now for this price type, the majority of the time when you're buying stocks, you can just put this in as a market order. That's going to buy the shares immediately at the current market price. These other orders, like the limit order, are more for when there's a large bid-ask spread and you need to tell the app at what price you want the shares. Again though, not really an issue for most stocks. Doing that, the platform is automatically going to show me the total cost of the trade, and I'm ready to go. Just 2 more questions here to start investing before I show you that step-by-step plan. And this is another really common question for beginners, and even those investing for a while. How many stocks should you own? You get all these great investing ideas every day online or on TV, and it can be very easy to build a portfolio of hundreds of stocks. You just keep investing in everything you see. But the truth is, you really don't need to. Research shows so that once you get maybe 20 or 30 stocks, your overall return starts to look a lot like the average market return because you're so diversified. You've got a little bit of money in everything. It's another reason why I like that core satellite strategy. Having those 3 to 5 funds gives you all the diversification you need in those asset classes. Then you've just picked 10 or 15 stocks of companies you really like, stocks you really think can do well. And here a question every investor needs to ask eventually: when should I sell? So you've got your stocks, you're investing every month. When do you take those profits and run? The simple answer would be never. Just hold those 3 to 5 funds and the 10 to 15 stocks you really like, maybe even 20 stocks, till you retire and start living on your investments. But we all know it's not as easy as that, and even long-term investors have to sell their stocks sometimes. So I want to reveal 2 problems I watch for in stocks to know when to sell. First is when there's a scandal or a lawsuit and no accountability by management. Hey, bad things can happen to good companies, and even the best run into problems sometimes. But if management doesn't step up and say, this was my fault, here's what I'm doing to fix it, and I'm dumping the shares. Now, another sell signal, one we talk about more here on the channel, is if the stock price just reaches where I think it should be. And whenever you're investing, you need some kind of an estimate, whether it's an analyst target or your own, and how much the stock is worth. I wouldn't necessarily sell a stock as soon as it reaches that target, but if it goes much higher, I'm looking for something a little bit more room for return. So now you've got those 8 critical questions to answer to start investing, and be sure to ask any more questions you have in the comments below because I want to make sure you're set to start making money. Now, I want to reveal that step-by-step strategy to start investing and how just 15 years of investing small amounts can give you an extra $3,000 or more each month from your investments. Understand, this is just a generalized plan. I've suggested amounts to invest here so anyone can get started, but if you can invest more, do it, and you're going to grow that portfolio even faster. Here's the plan. You start the first year investing just $150 a month, following the outline that we went through in this video. That first year, you're getting used to investing, putting that money away and watching it grow. And at first, I don't want you to get too caught up in the numbers here because the idea is more important for your success. If you can invest a little bit more to start, then that's great, but there are a few reasons to start off slow this first year that you need to know about. And first, I want you to get started with an amount that isn't going to break your budget. I want you to see that you can still enjoy life while you're investing your money. With this plan, starting off slowly and then adding to it every few years, I want you to see how even small investments can grow to hundreds of thousands of dollars and all you need in retirement. Understand that even when the budget gets tight, any amount is going to help you reach that goal. Again here, and we'll get back to that plan, I want you to start slow and gradually work up to investing larger amounts so you find that point where the investing doesn't break your budget. So we're starting off slow this first year with an amount anyone can manage. Now this second year, we're going to be increasing that monthly amount to $300, so you've got a whole year to play with your budget and income so you have that money available. Here, we're going to be doing this for 3 years, $300 a month, and this is to build that rock-solid habit of investing every single month. Since you've got decades left to invest, most of your investments can be in stocks, but don't forget to have maybe 10% of your money in bonds and 10% in real estate stocks at a minimum. That's going to give you that max return in those early years and really help grow your money. This is also a runway though. You've got 3 years of investing $300 a month, but then we're going to be increasing it to $550 to really start building your wealth. So in that 3 years, that is the perfect time to start building up your other income sources. Maybe you start some kind of passive income sources we talk about here on the channel. So you're ready to invest that $550 a month starting in year 5. So through that 5th year, you've got an unstoppable habit that is quickly adding up. You've built that portfolio to over $22,000 already with thousands of dollars in profits. And it's at this point you really start to see it grow. Here you're going to be doing this for 5 years, and I guarantee after that first year, it's going to be like second nature to you. You won't even miss that $550 a month. By year 10 here, you've got almost $80,000 in your investments. That's going to be $8,000 a year in profits, and we're going to be doing our last increase here. For the next 5 years through year 15, you're going to invest $650 a month. Stick with it. Find the cash to invest because this is the last 5 years you're going to have to put money away. That's because after year 15, that's it. Keep that money invested, but now you've got another $650 a month to enjoy life. And in 15 years, you're going to have a $720,000 portfolio. That is all you need to produce that $3,000 a month income when you retire. And next, I'm going to show you how to do that. Just 15 years of investing. That's all you need to secure a nest egg that is more than twice the average and produce a $3,000 a month income. Of course, feel free to keep investing. By this time, you're going to get to where you love watching that portfolio grow, and even cutting back to maybe $300 a month investing, you're still going to be able to watch it grow and enjoy spending that extra money. And this is the part I love. Look at the miracle of this. After just 15 years of investing, less than the time it took to hit puberty for some of you, you invested $92,000, and it's going to see it grow to $750,000, more than $600,000 in profits. That is $720,000, and you can withdraw about 5% of that a year, letting the rest grow. That's going to produce $36,000 a year or $3,000 a month for the rest of your life. Get your free customized investing plan with the link below, or click on the video to the right for 7 stocks I'm buying for 100% returns this year. 7 stocks to get your portfolio started. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.